So everyone wants to know, how much money do you really need to trade? Is it $10? Is it $100? $1,000? 10,000? 100,000? I think the answer might actually surprise you, and it's not a one-size-fits-all approach. Today I'm going to break down exactly how much money you actually need to start trading, depending upon your goals, trading style, and the platforms that you choose. And I'll even show you how some traders are using less with platforms like Plus 500 Futures to start or accelerate their trading journeys. So first, the way I see it, there really are three main factors that determine the amount of capital you need. The first is your strategy, the second is your risk tolerance, and the third is your goals. When it comes to strategy, that could be really fully encompassing. So what exactly do you do? Do you day trade options that expire every Friday? Do you swing trade options? Do you swing trade monthlies? Do you trade futures? Your specific strategy will set the stage for how much capital you're going to need, because if you want to trade that exact way, that'll tell you, okay, I'm going to need XYZ in my account in order for me to do this without having any restrictions, without me having any problems, having to make adjustments. I can just trade the things I want to trade the way that I want to trade it. The next piece is your risk tolerance. If you are someone who is going to continuously fund the account, let's say you make $75,000 a year in the United States, and you're like, okay, I can afford to put in, $300 a month into my trading account to help compound it over time, but also to essentially fund my losses and fund my mistakes and fund the learning curve. Well, if that's the situation, then you might be able to risk a certain amount of money, maybe $100, $200, maybe $500 per month, and you can back your way into how many trades that you take, what your stats have been, what your average percentage win rate is, and you can kind of back your way into, okay, how much could I risk on a given trade? How much of my account should I be risking percentage-wise, based off of like the big picture of what you have going on. I think a lot of people get caught up in like, oh, you can't risk more than 1%, 2%, 5%. I think much more in terms of dollar amounts and numbers. And I know, okay, I have XYZ coming in. I'm okay losing this. And so I'm not going to put myself into a position where I'm risking more than what I'm okay losing. The last core factor is going to be your goals. Everyone's going to have different goals. People sometimes will have daily goals, will have weekly goals, will have monthly goals and yearly goals. I want to tell you right now to pump the brakes on that. It was one of those pieces that I've talked about in past videos where whenever I had a daily goal and whenever I had a monthly goal and a yearly goal, it set me up for failure. It really did. So I no longer have goals like that. My goals are much more, I want to consistently trade my strategy. I want to improve my strategy's stats over time. I want to take trades only on these time frames because past data was telling me those things. So I would align your goals more with habits and more with things that you know if you do over the long period of time will get you to where you be in terms of financial status. But ultimately, the timeline and the specifics don't matter as much. All right, so let's get more detailed. When it comes to how much money you need, the amount of capital, the style that you do trade plays a big role here. So if you are someone who is a scalper, like you're taking a lot of trades because you're trying to be in for a couple of seconds, couple of minutes, you're scalping in and out, that's what you do. Because your trading frequency is going to be quite high, you substantially increase your risk of spiraling. And what that means is like, if you were to have a bad day and you were to like take a couple of trades, lose, the chance, because you take a lot of trades in general, the ability for you to keep taking more trades when you're not in the right mental state or when you are just kind of going on tilt is substantially higher. I've experienced it myself, and I have seen this happen across a lot of other people. You probably only need $500 to $2,000. This way your position size is not like insane, but it also depends upon what you're scalping. If you're day trading stocks and you're scalping stocks, well, you're going to need more than $25,000 because there's a PDT rule, the pattern day trade rule. We've talked about that in past videos. I even have videos diving deeper into how to avoid it. There are now many ways to avoid it, but if you're specifically going to be day trading stocks in one brokerage account, you're probably not going to be able to avoid it that way. So if your strategy is I want to day trade specifically and I want to day trade stocks, not options, well, you're going to need more than $25,000 in an account. Probably would recommend closer to 30. This way you give yourself a little bit of a cushion so you don't fall under 25K to be under the PDT rule. But if you wanted to go that same route and you wanted to start swing trading, I think you need substantially less. You can really get going with swing trades between $1,000 and $5,000, especially if you're utilizing margin. If you're utilizing margin, you can essentially put in $2,000 into a US brokerage account, and they're going to give you 2 to 4x, depending upon if it's day or if it's overnight. So let's say that I want to swing trade, I'm going to hold overnight. and I had $3,000 in my account, I might get up to $6,000 of buying power. Now, $6,000 of buying power on a position that might move 5 to 10% for a swing trade, maybe more, that's $300 to $600 in P&L swing. Not to mention the potential compounding and the scalability of that if you were to be profitable over time. Now you're up to $3,000, $3,500, $4,000 in your account of your own cash, but now you're getting double that in terms of margin. Obviously, you have to pay margin interest, that's something to factor in, but you can really get started and trade with decent size, meaning P&L swings of a couple $100. You can really do that with only a couple $1,000s. Now, if you want to go the option route, it depends upon your expirations. If you're going to be playing weekly expirations or even 0-day expiration options, you can get started with a couple $100. But if you're going to go deeper and you want to go out to monthly expirations and you want to play higher price stocks, you might need to have a couple $1,000s in an options account. The reason why I said that is because I was just looking at this yesterday and I was looking at a couple different stocks, and I think Caterpillar popped up as one of those stocks, and it's like a $360 stock roughly as I'm making the video right now. And to play the monthly expiration, or it was like 2 months out that I wanted to play, for strike prices that are around the money, I would need to have between $1.5 and $2,000 just to buy one contract. And so if you're playing bigger picture, your swing trading options, you're going to probably want to have a couple $1,000s in your account, sort of like if you're swing trading stocks. You might even need to have more if you play higher price stocks if you're playing options, but on shorter time horizons, you don't need nearly as much. We've been skirting around this one throughout, but if you trade futures, this is where I think you've got some pretty cool opportunities. For example, if you traded futures through Plus 500, I think $500 is an amazing place to start. You can even get started with a lot less than that, but $500 to start things off is awesome, because right now, one of the biggest reasons why futures are gaining popularity is because of the lower capital requirements. For example, with Plus 500 futures, you can get access to US and global futures markets with not only competitive spreads, but without needing a massive account balance. And thanks to their commission-free welcome bonuses of up to $200, more of your capital stays in the trade. So I'm on their site right now, and here's a look at some of the day margins. So if you trade intraday, which means you are a day trader and you are trading these positions intraday, this number is the amount of money that you need in your account in order to take a position with one contract of the specified futures contract. So if you wanted to trade, for example, the micro E-mini S&P 500, as long as you have $50 in your account, like, you can trade the micro E-mini S&P. So that's why having a couple $100, I would say around 500 plus, gives you a very nice cushion. You can even trade a couple of contracts if you trade the micro S&Ps. And it gives you a nice cushion so that you don't have to worry about falling under these thresholds and getting automatically liquidated. But for example, if you like playing the NASDAQ, the E-mini NASDAQ 100 would cost you, or would require you to have over $1,000 in your account for intraday trading. But if you were to go to the micro E-mini NASDAQ, all you need is $100. So a couple $100, you're able to take trades, and those trades could be very nice swings in terms of like P&L. You could be looking at risking $50, $60 to make over $100 on trades if you're looking for like a 1 to 2 risk reward. And you don't need to have thousands of dollars tied up in a brokerage account to take advantage of that. The list goes on and on. For example, if you like trading micro gold, $50 minimum. And if you do trade Forex, for example, AUD USD, GBP USD, the Euro US dollar, you can take these trades with literally $40 or even $50 minimums. That's pretty cool. But again, make sure you are aware that these are intraday, meaning you're in and out of the position before the end of the trading day for these specific contracts or for these specific futures that you're trading. Is less more? It absolutely can be. Starting small, in my opinion, not only helps you manage emotionally, but it also forces you to manage risk and stay consistent. My biggest piece of advice to give you in a situation like this where you're starting small relatively, and it's all relative, and you feel as if, oh man, I'm not trading with the size I want, or I wish I had more. I wish I was able to trade with, P&L swings of $1,000 risk to make 1,500, make to 2,000. That would be more meaningful in my life. And if you're not there, let's say you're risking 100 to make 150, or you're risking $50 to make 75 or $100, and you're in that ballpark, the habits and the risk management and the reps that you are getting right now are going to pay off exponentially if you can become consistently profitable over a longer period of time. Exponentially. It won't matter. You won't think about that 1 to 2 years that you spent putting the bricks down, laying the foundation, getting all the trades in, getting in the reps, because you'll be trading with so much money later on that it won't matter, and your sizing will be almost as much as you want. If you can't grow $1,000 into $1,500, you're probably not going to be able to grow $100,000 into $150,000 and so on. But what about the hidden costs? There are absolutely hidden costs involved that you need to be paying attention to. Things like commissions and fees. Throughout my trading journey, commissions have dramatically decreased with a lot of these brokers and platforms that are now offering commission-free trading, which is awesome because it adds to the competitive nature of everything. You also might use a broker or even platform that actually costs you money. There's actually a number of platforms that require data subscriptions, that require monthly fees, and they require just platform fees specifically just to use their trading interface. Not to mention poor executions, and even slippage that can all eat away into your profits. That's why I think it's helpful to use a broker that's straightforward and transparent, such as Plus 500. They have no hidden fees, and everything's laid out clearly from the start. People also don't talk too much about the emotional costs. If you're trading with a lot of money and you're not like numb almost to that money, or it's too much money for you to be trading, you're gonna have emotional swings, which will eat away and bleed into your personal life. And let me tell you, I've experienced it myself. It's not fun because it starts to eat away and chip away at all the other things that you do. And having a bad day in the markets now means you have a bad day at work. It means you have a bad day at home. It means you have a bad day with yourself. It means you have a bad night's sleep. Like, there's a lot, and that all just snowballs. And that is a huge part that I think it's very important to take that down multiple notches. There's no real magic number, but you need enough money to survive drawdowns, to deal with the losing streaks that will inevitably come, to deal with those bad days, but to be able to persevere and actually execute your strategy day in, week out, despite the ups and downs that are inevitably going to come. Start small, lay the bricks, stay consistent, and scale as you build the experience. Let me know in the comment section down below how much you started trading with and what you would do differently if you could go back knowing what you know now. And if you're curious about futures and want to try trading with lower capital and no platform fees, check out Plus 500 Futures. I've been exploring it myself and will share more about my experiences soon. The link is a first link in the video description box. Trading in futures and options involves the risk of loss and is not suitable for every investor. Trading with leverage does come with a risk. Thanks so much, guys. I'll see you in the next one. Peace.